Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about AUDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market, then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Now, starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical monthly support and demand area. In fact, from here, from this close, this monthly close, all this previous rejection to the upside was created. Then the market went and tested again the same area and immediately rejected it to the upside. And at the moment, the market is testing again the exact same zone from which there is a good probability to see again a potential rejection to the upside, as already happened in the past when the market was testing this exact same zone. We can also notice that from a pattern, actually more from a market structure perspective, the last move was an impulse to the downside, which created a new low. So we just had here a new lower low, and after an impulse, the next logical step is for the market to provide a correction. In fact, if we want to measure a first potential upside target here from the monthly, we would have to take our Fibonacci from the high to the low of the impulse leg, which gives us a 0.32 retracement exactly at this level, which would be a first potential upside target after this massive impulse to the downside. Now, dropping down on the weekly time frame, what do we see? Now, here on the weekly, we can notice how the market is testing exactly the previous weekly low. Now, from this weekly low, there is a good probability of seeing a potential push higher, essentially creating a potential double bottom at this weekly support zone. That is definitely possible. Apart from that, the weekly bearish structure is currently still intact. We have the creation of already 3 lower highs, and at the same time, we already have these lower lows. So it's a question of whether or not the market will manage to hold at the previous low and essentially create a double bottom at this area. Now, there is one important thing to keep in mind, and we can easily notice that if we go down on the daily time frame. Now, from a daily perspective, we can notice that not only the market is testing that quite strong historical monthly support and demand, in which there is a good probability of seeing institutions adding longs, and we will be speaking about that in just a few moments when we move to the commitment of traders analysis. But we can also notice how the market just opened with this massive gap. In fact, last week we had the close here, and now the market just opened here. So there is clearly a gap, and when there is a gap, the market tends to close that gap. So there is an increased probability of seeing a potential rejection to the upside away from this area, completing this gap that we have here from a daily, also obviously weekly and monthly perspective. Now, before we dig deeper into what we have here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing. Now, if we're looking at the data for the AUD, it's important to keep in mind that we are already looking at AUDUSD because all currencies on the spot are traded against the USD. And we can notice how with the last reports, net positions have massively increased. We went from minus 77.6k net positions up to minus 71.8k. So clearly institutions are now starting to move again back to the bullish side for the AUD, meaning to the bullish side for AUDUSD. So they're slowly starting to again add longs on AUDUSD. And this is important because, as we have just seen, we are now inside of a monthly historical support and demand area, as we have noticed at the beginning of the video. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So from a daily perspective, at the moment, the market is testing strong daily historical support and demand. Institutions are adding longs, and we can also notice that in creating this move to the downside, the market has printed this overextended M pattern. And in general, after the creation of an overextended M pattern, what you would naturally expect is for the market to create a rejection to the upside, to go and retrace at least to the 0.32 of the Fibonacci taken on the impulse leg. That is usually how, in my experience, an overextended M pattern plays out. I want to find an example of that. Well, it's not really overextended, but we can see that every time the market tends to create an M pattern, after that it goes and completes the pattern at the neckline. In the case of an overextended M pattern, so if the market essentially breaks below the previous low, in my experience, I noticed that the market tends to retrace in that case around the 0.32. Now, if we move back to the current situation, we have to keep in mind that we have the market testing very strong historical monthly support and demand, a gap here from a daily perspective, and an overextended M pattern. All this increases the probabilities to see a potential rejection to the upside. So in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside, completing this M pattern at the neckline. That definitely wouldn't surprise me. Now, all this general free education and analysis that you see me provide on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go and check out my transparentfxtrading.com website, which you find linked in description. Here, you have the possibility to gain access to all my courses, starting from the very basics of charting all the way up to the more advanced topics like how to build automated trading strategies using the MQL4 language, how to build portfolios of strategies, and using quantitative finance tools like the Quant Analyzer to actually build those portfolios of strategies. You also have the possibility to gain access to my Trading Station software with the Telegram notifications integrations. You can get one-on-one mentorship directly with me. Also, you can gain access to the COT data software, which you often see me use on my YouTube channel. This is an all-in-one program. In fact, on top of all of this, you also have the possibility to gain access to all my personally developed EAs, so my automated trading tools. Here, you will see all the presentations of each and every one of them. And also you have the possibility to gain access to the trading show, so essentially a live stream of all the trades happening in live time from my live account. And if you continue to scroll down past the testimonials, you will see that you can also find the button to join now, and you will essentially be put in contact of my WhatsApp number. So I really suggest that you go and check it out as soon as possible. The link is in the description, and I will see you in my next video. If you enjoyed the video, make sure to drop a like, and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.